Perfect. All right, everyone. Well, you are in the right place if you are looking to learn how to invest, but truly have no idea what to do, where to get started, and even what possibilities you have. So, we're here to help you unlock the passive income secrets, diversification, and really help you gain some financial confidence without having that finance degree. I'm telling you, the finance degree is great, but we can always partner with the people that have those and then have something that we can actually produce. So, with that, I want to share a little bit about EmpowHer Capital, why we're here, my background, and then I'll also let Bethany share her background, and then we'll continue on with the day. So, we truly believe that women should have the power to be able to manage their finances through education, innovation, and just strategic investments. So many of us, we don't learn about investing, or we hear about it from our employer about a 401k. We're all raised to get a job, get a 401k, invest. Most people say save for retirement, but you are an investor. You are investing in your retirement. But we never really get the experience or the well rounded answers for us to really apply and understand what that means. So, we are here for financial empowerment to close the retirement gap for women. And it's just like, the income gap that we have. It's the same thing on the retirement level. And then provide more access to alternative investments and not make it such a scary thing. The thing is investments are investments, whether it's a 401k, whether it's an alternative investment, it is all investing and it's all required and needed in order for us to retire the way that we deserve and that we want. And that may not be on what you've dreamed about, because I'm betting someone has not sat down with you to say, let's really dream about what retirement could be. What is your reality? What could happen? And how do you get there? So we want to start building that curiosity to help you get the idea that you too can have that. And it is not up to anyone else but you, and you have the tools and resources. So maybe it's building legacy. Maybe it's breaking generational cycles throughout, what you've seen in your past life with all of your different families and how they've done it. And we're here truly to help simplify complex financial strategies to make it where you don't want to feel overwhelmed or run, but instead feel empowered by what we are doing. So, a little bit about me is I come from the HR world, and I recognized pretty early on that we handle, administrate the 401ks, but I'm going to be honest. Most people in HR have no clue about the 401ks. They just focus with their vendor. They head to the vendor for information. And at the end of the day, no matter how much the vendor wants to help, they want your money to invest in their funds. So if you bring up other opportunities or other ideas, they're never going to say that that's a better option because it doesn't get your money in their pockets. So I realized I was part of the problem. And so I left my HR world for a little bit, created EmpowHer Capital with Bethany because we saw that there's something that needs to happen and something that needs to shift. So I'm going to let Bethany tell you about her history, her past, and why we're here and why she is such a powerhouse to help bring this up.
Well, and I actually had spent a stint in HR as well. So I knew exactly what you were talking about because I worked hand in hand helping companies to build their entire benefits package. So whether that was their health insurance, whether that was their retirement, whatever that looked like. So I knew exactly the process. I even knew the education piece. And what I found was I worked so hard to educate our employees so that they knew and understood what the benefit package was, why it's of value to them, because they had never even been exposed to a benefit package. They didn't even know how to use it. So I knew and recognized the responsibility of education was on me, right? Our HR team needed to get that out and communicate that in a way that they could absorb it and it could be of value. Otherwise, why are we even doing that? So when we started to see more and more employees using it, then we actually saw employees having better health because they were actually going to the doctors. They weren't waiting, better attendance at work. We saw so many things flip the corner. But then what we also saw, they actually started to invest in their retirement. Now, they didn't know a thing about investing. They didn't know a thing about retirement. So all they knew is they checked a box and every week their money was going to their page, out of their paycheck. So me telling them and helping them to understand, no, this money isn't just sitting nowhere. It's actually sitting in an account. And let me walk you through that. And what does that look like? And that's when I really realized nobody is teaching people how to invest. We spend 18 years in high school and elementary and middle school all the time, what? Learning how to get a job, right? Then we go to college and we get the supposed job, right? And the whole thing, it's all about get a job, but it's never about how do we invest. And even finance isn't necessarily educating them. And so we as a team said we need to do something collectively about this, and we need to do it in a very real and impactful way. And that's what EmpowHer Capital is. So I have 30 plus years of business. I've founded 8. I've scaled back. I only have 6 right now. So in doing so, I've learned a lot, burned a lot, figured a few things out, fallen on my face, got back up, figured a few more things out. And in doing so, we just continue to pivot and flex. And that allows us to adapt, because what we did our parents' generations for retirement is not the same, and honestly doesn't work for us. So we need to be very mindful of that, and we need to start taking a look at that, a very hard look, and seek out sources that will educate us. And that's what we're doing here at EmpowHer Capital.
Perfect. Well, now let's get into some of the juice. And thank you for that, Bethany. That was a great background. All right. So a big thing, just making, okay. So a big thing we want to think about is what keeps smart, capable women from investing outside of their 401k. These are some of the things that we hear all the time when we're chatting with someone. They don't want to lose their money. I don't understand it enough to really want to make a move. It sounds too risky or advanced. And then what if I mess up? What if I lose all my money? Or I just don't know who to trust. These are all things that we all have fears of, but being able to connect and partner with people that have been in this space allows us to mitigate some of those fears. And with a little bit of education and just little baby steps along the way, we're able to start building that confidence, that momentum. And what we realize is these are all just symptoms of the system that never really taught us the full cycle. So understanding that we all start right in this place. The next step is saying, okay, what do I do about that? And how do I get started, even if it's small? And that's what we're here to help share with you. And we sort of touched on this, Bethany did, but where are we supposed to actually learn this information? Is it our schools, our employers, our parents? Maybe it's advisors. Well, the reality is it's none of them. Because schools, there's only 21 states that require even basic personal information or finance courses. And I'm talking the
Kylie,
last time I heard, they were still helping people do a checkbook. And I don't
hey
know about
Kylie,
you, but I don't do checkbooks. I think Bethany might have a checkbook or two, but that is not our reality anymore. And the worst part is none of it really covers investing. You have to take a specific investing course to do that as an elective. And again, a lot of that investing isn't going to be about your alternative investments. It's going to be about your markets and your stocks and bonds. And so it's still, again, leading you in one direction. And then you want to think about your employers. At the end of the day, like we said, HR doesn't know anything about 401ks. They are administrators to the plan, and they've probably worked with their vendor for years and years. And the likelihood of them understanding what the fund is, what you guys can invest in, is pretty unlikely. And they follow that 401k provider script quite heavily. And then we want to think about, well, it's the parents. This is something that my parents still believe that it was their job to help me with their learn about finances. And I had to pose the question to them, but who taught you about finances? Who, are we still doing the same thing that our grandparents were doing? Now, I'll tell you, it was definitely a conversation that wasn't fun. But the reality is, in order for us to grow outside of whatever we've grown up with, we have to ask more questions. We have to take bigger leaps. And that's when we start breaking these generational cycles. So take a second and think about, is your family doing the same thing that your grandparents were? Maybe your great great grandparents? Are you happy with where you guys are when you are managing your money? If the reality is no, it's time to make a move. It's time to shift and start getting some of that education that unfortunately is up to us to make sure that we can find and get the resources. And then you have the financial advisors. They do a wonderful job, but they are really there once you're really starting to build wealth and having that momentum. And the thing is with financial advisors is they can help you figure out what you want to do, but they can't actually help you find a product. so they can navigate. They can make sure that you have all your ducks in a row. But if you've got a couple different options, their hands are tied. So that's why you are amazingly here, because this is exactly what we're here to do, is to help educate and help provide a product that can change your life, because now you can learn how to alternatively invest and what that can mean for you, your family, your future, and your legacy. And here's another thing: you weren't left behind at all. We were just left out of the picture. We tend to think that, we should just know all this information. But here's the thing: Wall Street doesn't really want us to know this information, because if we're playing the game, they're losing out on money. And so it's not because you're lazy. It's not because the system, was designed for you. It was truly to separate us from that space. So now we need to make sure and take that step, because I don't know about you. I feel pretty educated. I feel empowered. I know I'm working on a really awesome career, and I know we're smart, right? So this is the thing: is no one explained how wealth was really built for us. We weren't invited into those rooms. It is definitely a man's world out there. And that is why we have Empower Her Capital, because we are breaking that. It is absolutely a woman's world. And honestly, we probably do it better. So the other thing is we just don't know where to ask. How do we ask if we don't know who to ask? And Wall Street doesn't want us to know. We're just playing a game that they don't want us to win. With that, I'm going to let Bethany talk to you about some of these awesome investment opportunities that you could have.
So typically what happens if you go and you watch anything on TV, mainstream media, the only people that are advertising are your Edward Jones, your Charles Schwab's, your big banks, Chase, Wells Fargo, maybe some of your medium-sized banks, but they're the only ones really advertising, and their strategy is to get you to come to them because they only offer one or two products. Those one or two products are the stock market. That's it. That's all they are. So they generally have a fund, and then you come into the fund, and then that fund is being invested in the stock market, and they're making returns on it just as much as you are. So they're also making money on your fees. So what most people don't stop and realize is there's a lot of volatility in the stock market. We saw '08, many people completely lose their retirement accounts, not because it was mismanaged, but because a computer couldn't predict what happened. And because of that, the computer didn't have any fail stops. There wasn't a human being actually attached to those accounts who was incentivized to stop the bleeding. So no one stopped it, and it just kept going, 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 and it cost millions of people retirement accounts. So an alternative investment is something that you're not necessarily seeing on mainstream media. The IRS fully agrees with and allows for investment. So you can invest through a retirement account, you can invest cash, it's fully recognized. It's only called alternative because it's not on the stock market. That's it. That's the only reason. Now, you may, for instance, invest in a REIT, but a REIT is a real estate investment trust. Many REITs are publicly traded. So that honestly isn't fully considered an alternative investment, because once it's publicly traded, now it's on the stock market, right? So in these situations, if you buy a rental home, that's considered an alternative investment. If you invest in oil and gas, whether it's mineral rights or whether it's the lease side of it or whether it's the build out of it, it doesn't matter which part of it. There's hundreds of ways you can make money in oil and gas. Every part of it is considered alternative. If you're looking at crypto, crypto is an amazing thing that has just escalated, but there's so much unknown. So it doesn't matter which of these three that you're investing in. The difference here is in crypto, you could be investing in the payment processor or the coins themselves. There's, just like oil and gas, there's various ways that you can invest in them. So when you're investing, it's considered alternative because you're not going to the stock market. You're not going to something that is federally regulated and controlled to a lot of aspects. You are in a lot of control of that. So just like you can pick and choose which house you want to invest in or which apartments or which funds you want to go into, those are the things that are alternative investments. Generally, they could be set up for cash flow. They could be set up for tax benefits. They could be set up for legacy growth. Each one of them could be set up differently, and you may want to mix and match based on the needs that you have, but it still is determined whether or not it's publicly traded and it's on the stock market. So if you go into a real estate syndication, like we have several of them, where we're buying a $50 million multifamily property, then you don't have to run it. You don't have to be the landlord, but it is still not publicly traded. So it doesn't matter what that stock market does. It's not going to impact your investment, because it's that investment would literally could be leveled by a hurricane. Insurance is going to have to rebuild it, right? And your investment is still there. But with stocks and bonds, so much of that is subjective and controlled by other people, and you don't have control. So there is a lot of volatility. Alternative investments oftentimes can still have some volatility, like we've seen in crypto, right? So maybe folks that are investing in crypto aren't buying the coins per se, but maybe they're on the payment processing side, which is a lot less volatile. So it just gives you more control and more options.
Maybe we'll go to the next slide. There we go.
So some of the other investment options are private credit or debt funds. Now, there's a difference here. So private credit, sometimes you might have heard it as private equity. Sometimes you might have heard it as, you've definitely heard it as a debt fund. Many people call them different things, but in essence, they're all the exact same thing, where investors' monies are pooled together and then they are then lent out on as a debt, as a promissory note onto an asset of some kind. So in this situation, it could be a promissory note against a business. It could be against an asset like real estate. It could be uh, equity in a new startup company, something along those lines. It doesn't really matter what the asset is that you're investing. Oftentimes, what a debt fund is, you may or may not have actual equity. So there may not be any ownership. You could just be getting a high rate of return. So there's no tax benefits per se, but there's cash flow and it's consistent and you can count on it, because until that note's paid, it's going to keep coming in, right? So debt funds are high cash flow, very little volatility, obviously, because it has nothing to do with the market. It has zero to do. Even if folks lose their jobs, go into foreclosure, you foreclose on the property, now you've gained the asset, right? So volatility is near to zil in that respect. Self-directed retirement accounts. So most people don't realize that you can actually set up your own retirement account. Now, as an individual, you can set up a IRA, which has limitations on it, but it can still be self-directed. If you're a business owner, you can actually set up what's called a solo 401k. Those self-directed retirement accounts do not have to be publicly traded. So just like an employer who sets up a 401k and they're pooling all the employees' monies together, they're making investments. And oftentimes those investments are only in mutual funds and stock markets. As a self-directed retirement account, you can invest in the real estate, you can invest in gold and silver if you wanted, you can invest in crypto. The list is actually very substantial that you can invest in as a self-directed retirement account. Now, the benefit of being in a retirement account is, although you can't take advantage of any tax depreciation, you can take advantage of, depending on if you set it up as a Roth or a traditional IRA, you can take advantage of some benefit of tax savings because of that. So if you did it as a Roth, you would pay tax now so that when you withdraw it, you don't have to. If you did it as a traditional IRA, then the money invested is pre-tax and it reduces your taxable income now. And then when you withdraw it, you pay tax on it then. So there's still a tax savings there, but you don't get to take advantage of those tax depreciation options. So startups and private businesses. Now, again, this could be a promissory note. So it could be a debt fund type structure, or it could be an equity. Many of you guys have watched Shark Tank. You've seen them. Okay, I'll give you 500K for 20% of your business. That's what these are. So a startup or a private business needs money to get started, get things rolling, whether they have a product or a service, whatever that looks like. So you actually have the benefit and the opportunity to be one of those investors. But how do you find those investors? Where do they come from? How do you find the information? How do you know if it's a good one or not? I mean, the idea sounds great, but are they going to be a good business person? Lots of folks have amazing ideas and they're terrible business people. So how do you vet that? What due diligence should you need to do? And that's where investing in a fund can provide you a level of protection. Generally, your fund managers are doing the due diligence on them. There's an entire team involved that has background and experience. One of the businesses, manufacturing businesses that we've invested in at EmpowHer Capital, Frame Tech, has many, many years of background and experience, a solid board. We've thoroughly vetted them. We've toured the properties, we know, and they've already, since the first investment we did with them, they've already grown two more facilities. So they're booming like crazy. So it's absolutely fundamental that you look into that, but you may not know that and you don't know how to do that. So investing in a fund like EmpowHer Capital allows you that opportunity to still take advantage of that. Now, the cool thing about a startup over a private business is you can have equity. You can even take advantage of some depreciation depending on how the structure is. You may not see cash flow right away, right? The business has to get up and going, but you could see cash flow down the road. You could actually have, if it goes publicly traded, you could have stock shares and incentives that are later given to you. There's lots of ways. It's however it's negotiated, what that deal structure looks like. But it gives also you the opportunity to be a part of some amazing inventions and amazing programs and products that are coming out. You would get to be a part of that. So there's another opportunity as well that, once again, that's all alternative. It's not publicly traded. It's not mainstream. You need to know somebody. You need to have some research. You need to have some skills and or access to someone who does.
Oh, nope. Okay, we're good. Sorry. I thought I skipped one.
So relying on a 401k, why is it not working? Now, when a 401k was launched, would you all agree time was different? Society was different. Many people still only had one parent in the household that was working when they launched a 401k. So the reason a 401k was launched was because originally employers had created something called a pension. Didn't matter when you retired, as long as you served 20 years with the company. So if you started at 20, you could be 40 and you could retire, and they would have to pay you the rest of your life until you died. So a pension was great when people were dying young. But when people were dying early, much, much later and living to be 100, well, that started draining that account. So they started going, well, we might need to do something a little different. Society was changing. People were getting healthier. People were cutting back from all this smoking and alcohol that they were consuming at every single event and things like that. So their longevity was much, much better. So what they did was they came up with a 401k plan. Now, the 401k plan was for the benefit of the employer, not the employee. Yep. There was no concept in there that said, hey, we need to do a better job for our employees. That thought probably didn't even cross their mind. It was, we're draining our accounts. How can we solve this problem? Because they still wanted to provide an incentive to employees to stay. So for longevity purposes. And so that's when they started the 401k. And then they also started things called vesting. So a 401k is simply an employer sponsored plan. All that means is they have set up a fund and they've got a third party overseer. That's it. That's all it is. Okay. Now, when they do the vesting, that's a way for them to have more control over the money that's in that pool. So every employer who's putting money into the 401k, it's going into a pot. That employer controls it. They control when it gets delivered to the third party, how much of it gets delivered, every part of it. They control it. So then once they've determined, okay, we're going to do once a year, once a quarter, we're going to make deposits weekly, whatever that is, they determine that. Let's just say they only decide to make deposits once a year. Okay. If they're only going to make deposits once a year, who's making money on your money all that time until then? Yep, you guessed it, your employer or the third party entity, right? Either one of them. And so what happens is it's not set up from the beginning for you to be successful. It was never set up as a one-stop shop. This is going to be your retirement plan. You won't need anything else. That was never the plan. That was never the agenda. So even when Edward Jones and Charles Schwab were out there, if you invested 10,000 when you were 25, all of that stuff that you were taught, that's the only thing you were ever taught. Those folks, it never was set up to be the entire thing. At the time, Social Security was still a robust thing, very much anticipated to be a part of the solution. So that combined with your Social Security was supposed to be the plan. So it was taking complete control away from you. It was putting all of the control into the employer and the third party. They have complete control. Literally, they're not even asking you all the questions they should be asking you. Instead of what would you like to invest in, they give you three choices. When technically they're supposed to give you everything you want, but they don't tell you that. They only give you, well, we don't want to give you too many choices and confuse you. So they only give you the three they want you to go into. So there, it's always dependent on the market. It's always volatile. It's always, they're always making a fee on top of a fee on top of a fee on top of a fee. So they're always making sure they're getting paid regardless of how the fund does. Regardless of whether you make money or not, there's no incentive for them because their fees are straight, flat, structured. If the accounts were set up in such a way that if you grew a certain percent, then they would make a certain percent, things like that, there would probably be a whole lot more incentive, but that's not what they did. So what they're doing is literally depleting your accounts with all of those fees, which is part of the problem of why it's not working, why you're never really able to accumulate because you're not able to compound at the rates that you should be compounding. It also doesn't give you flexibility. You can't invest in whatever you want. It's only their products, their things, and you got to follow whatever their rules are. Some third parties, by law, most people don't realize this, the IRS allows for you to take a loan out against your 401k. It's a federal thing. They're not allowed to deny it. But do you know how many HR people and how many third party providers are telling them, no, we don't allow that? They don't legally have a right to do or say that, but nobody is holding them accountable and nobody knows any different. So they're completely taking that away from you. How many folks early on, if they would have known that, would have pulled money out, bought their starter home, and then would have paid themselves back? They would have been in a much better situation, but the employer would have lost compounding interest. So
Mm-hmm.
it wasn't to their benefit to do that. So that's why they're telling folks things like that, right? So why does that matter now? Alternative investments matter because you you got to stop hating the game. Just learn to play the game better.
Mm-hmm.
All the way around. If we were never invited to the conversations, we were not in the big boardrooms, right? They were all controlled by men and this and that. And these five men are dictating to the whole rest of the world, right? That Federal Reserve Board is dictating. And we were never invited to the game. Stop boohooing it. Stop being mad about it. Stop begrudging it. Do something about it. Play the game better. When you play the game better, you beat them at their game. Remember,
Mm-hmm.
chess always takes two parties. Nobody can play chess by themselves. It always takes two parties. They know that. So if you start taking back some of the control and you start educating yourself and you start doing things differently, well, now instead of $4.3 trillion that they have access to, they might only have 2.3 trillion. That's a big difference. And it's
Huge.
a huge difference, but even more so if they don't have access to it and you do, how much of a bigger difference you're going to make, not only in your life, but in your community, in your family,
Mm-hmm.
in your legacy. Things will absolutely dramatically change. We then turn it on its head and we then control the game. We can start doing. Most people don't realize women are anticipated to control 70% of the world's wealth. 70% by 2030. We better
That's
start figuring this
crazy.
out. How are we going to do this if we don't know what we're doing? We better start figuring these things out. So alternative investments matter because it's part of the equation you need to get ahead. If they only want you to play in the stock market, stop playing in the stock market. If that's what they're doing and their agenda is pushing you down this path, get off the path. jump the curb and get on a new path. So, alternative investments provide passive income, the things you still want, right? You still don't want to have to deal with tenants and landlords. You still don't want to have to pay active income earnings, right? It gives you the opportunity to take advantage of those things. But in today's day and age, the returns on alternative investments are 4x greater than a stock market return on the average fund. You can look it up. It is true, it's legit. And it has tax advantages that you don't necessarily get. You don't get them at all on a stock investment at all. You get dividends, you get to pay ordinary income tax. That's how it works. On a real estate investment, if you go into a syndication and you're in a equity deal, you could be getting tax depreciation that could be 2x your return every single year. That can offset. So we've got a lot of folks who are invested in oil and gas, killing it, making phenomenal cash flow returns, but they need to offset those returns. So because those are passive returns, they go into some of our multifamily syndications, and then all that tax depreciation that they're collecting, 100K, 200K every single year, they're offsetting those oil and gas returns. So now they're paying net zero taxes.
Mhm.
That's when you start beating them at their own game. Because, not to say we don't want to pay our taxes, we still want good streets, we still want all of that. But that is how wealthy stay wealthy. They don't pay more than their fair share. And just because they're wealthy doesn't mean everybody in the dog needs to have them pay their taxes. No, we all need to pay our share, but we don't need to pay more than our share. And
Exactly.
recognizing that the loopholes are there and they were put there by the wealthy. So start using them. So those tax advantages are huge. You can also still control the shot. You literally control every bit of it. So instead of ready, aim, fire, it's okay. Do I want to go this way? No, I'm not ready. Okay, I'm going to move again. Okay, do I want to go this way? Okay, I'm ready. I want to go this path. Now you're choosing that. Then, oh, nope, no, I'm not ready. I'm going to take aim. I'm going to look. I'm going to investigate. I'm going to get some more information, right? Then it's, okay, I'm ready to launch. I'm ready to go. Now fire. You're going to have a better chance. And women, everybody knows it. You can look this up too. It's amazing. Women are a better shot than men. So if we know that, there's a reason behind it, and it's usually the way we think and process. So when you're the one controlling it and you're the one calling the shots, generally you're going to make a better decision because you have more of a vested interest. And that's how we want to make sure that you understand and know that. So people generally make money by cash flow, by appreciation. They can also make money by depreciation because if you're saving money on taxes, that's money you're not spending, right? They also have equity growth. So that legacy growth, you can have an equity share into a business or a property. And then when it's sold, now you get to cash out on that. You can have dividends or profit sharing, depending on what kind of asset it is, as well as capital gains. So there's lots of ways that you can make money, not just one way, which also helps us to play the game better.
All right. So let's dive into the barriers a little bit and some things that we can do, some things we can avoid. But the first one I want to talk about is the barrier of I just don't understand. Well, I'll tell you, we all start here. None of us understand what we're doing. And the biggest thing that we can do is just start to learn in bite sized little pieces. I remember the first time I went to start learning about stocks and bonds, and I lasted about 5 minutes before I shut that down and then went and found someone that could actually lead me in the right direction. And I learned quickly that you do not have to invest alone. Having partners or talking to people that have been through it, and not just in one investment type, right? There's so many ways to invest, but the more I started to learn, the more it felt it felt less scary, is what I'm trying to say there. But it's also about not feeling like you need to master the markets. There are people out there that is their job to master the markets, to master the alternative investments. You just have to be able to find someone that relates to what you're looking for, that you're interested in, and learning from those individuals. And then being able to explore new ideas, new concepts, be open to the idea that what we've been taught isn't the only thing out there, opens your opportunities to things that you may never have dreamed that you may actually be able to get involved in. And confusion is part of every new skill level. I don't think there's been one thing in my life that I have learned that wasn't confusing from the beginning. I mean, I even think about that peanut butter and jelly analogy of like putting a sandwich together, right? And if you don't say every specific little detail, you could literally have your hand in the peanut butter, right? So we have to start somewhere. We have to start putting the little pieces together. And it's truly about the education. Everything comes down to education and learning and being willing to build that journey together. So you do not need to be an expert. You just need to find the right guides to help you along the way. And we have some investors that they want to learn anything and everything and all. And then other investors that they just, they want to make their money work. And so they're telling you to go put it where it needs to be so that I'm getting those returns to have the life that I want. And then barrier number two is I don't have time. Trust me, we get this. Bethany with 5 businesses, 6 businesses, girl does not have time. So it's all about learning how do you do it effectively, efficiently, and more so finding someone that it is their full-time job. We don't want alternative investing to be a DIY. That's where we can lead to some really bad situations because we don't know what we're doing. People can be, people suck sometimes at the end of the day. So you have to just do your due diligence and work with someone you trust and get better, not better, but get additional thoughts and opinions on whatever you're looking to invest in. And you're already delegating your time to life and business. We don't want this to take up more of your time. We get it. Full-time jobs, careers, family, friends. We want to make it easy so that you don't have to spend a lot of time with it. And then we don't want to add more to your plate, and we want you to feel that you can grow confidently in your investing journey. And the thing is wealthy families build wealth because they use time leveraged investments. So passive strategies they exist so that your time stays your own. And at the end of the day, the thing that we can never get back is time. So if we can effectively do this in an efficient way so that you are learning, you're growing and changing while not changing your life to that capacity, that is the true goal. And we can help you pass that barrier. And then the next barrier is I'm afraid to get it wrong. I think every single one of us has this fear. It is terrifying to lose your money or feel like you don't have the control of the money. And with the 401k, we don't necessarily feel that because we are taught to believe that that's the way that it's supposed to happen, that the vendors are looking out for us, that, they know what is best for us. And the reality is that's just not true. So you have to find people that are truly in it in a different space and are looking out for you on that high of a level. And the thing is perfection is not required. True action is. I don't know anyone that's perfect. I know I'm not perfect. I know Bethany's not perfect. But what we do is we act. We learn, we grow, we fail forward. Because if you're not failing in some capacity, you're not learning anything. So you need to just take a chance on yourself and trust yourself that you're doing and acting. And again, you do not have to have it all figured out. That is where people like us come in to help you with that. And the biggest thing is staying stuck. None of us want to stay stuck. None of us want to get to a point where we stop looking at our 401ks or our investments and putting our head down because we don't want to see how bad it really is or maybe how good it is. It might be just as terrifying if it's super good and then, willing to lose it. So fear of messing up keeps many smart people from ever investing, and we want to encourage you to let the fear go and take a chance on yourself because you and your family deserve it. And then barrier number 4 is I don't know who to trust. Now, this is a hard one because there's a lot of people out there spreading a lot of financial advice. So making sure that you find someone that you feel confident that they have financial advice, that they're there for your best benefit. At the end of the day, financial advice is a lot of the time it comes with a product. They're selling something, they're bringing an opportunity to you. That's what true investing is. And we at Empower Her Capital, we believe in transparency, value based investing, and real relationships. We are not the type of company that's going to get you on day one, right? Or say, hey, you're coming in right now. That's not what we're about. What we're here to do is to help you feel empowered and encouraged and believe that you can do it, even though no one's ever taught you. And you deserve a seat at that table without jargon, without judgment, but actually being able to ask the questions, not be afraid to ask those questions, and to really start learning. And really, the hardest part isn't learning, it's knowing who is real, who to trust, and then where they're getting their information. I'm going to shift it back to Bethany on this one.
So from overwhelmed to empowered. So one of the things that we as humans need to understand, we learn best from doing. We learn from watching others and then putting it into practice. And whether it worked or not for us, we learn. And that's how we learn. So in this scenario, we're talking about an HR director. She's 42. She's managing her company's 401k, but she never felt confident about her own retirement. That is a sad place to be. Her role as the HR director is literally to empower her employees, and she doesn't even feel empowered. She doesn't even understand. She's contributing 10%, but she's watching the market swing, and now she's anxious. Now she's worried she's losing all of this. She thought real estate or oil and gas was too advanced. She felt like she just didn't know enough. And you know who probably convinced her of that? These third-party vendors that she deals with all the time as her in her everyday life. They probably convinced her that it was risky and that there was risk involved, and there's no risk involved with what she's doing. And so because of that, they've created fear in her mind. So after attending one of our webinars, she joined in our intro investor session. Now, what she's done is she's taken the bull by the horns and she said, look, I don't know what I don't know. You clearly know a thing or two. Let me learn. Right. So she came to the webinar, she took some time, and then she said, let's get on a call. I need to talk through some things. She made her first small investment into a passive investment opportunity. So she didn't have to go find the deal. She didn't have to do the due diligence on the deal. She didn't have to deal with the tenants in the middle of the night. She didn't have to write the contract. She didn't have to review the contracts. She didn't have to find none of that stuff. She didn't have to do any of it. All she had to do was read the legal docs, have them reviewed by her attorney. When that was all good, she signs off on it. She wires her money. The money is then put into the investment. So it's backed by an investment in this scenario. And she's now starting to get cash flow. When you stop and realize the difference there, how much stress is automatically alleviated simply because she didn't have to find the deal. She didn't have to worry about the contract. She didn't have to worry about who's taking care of it in the middle of the night. She didn't have to do all that stuff. And now she's getting monthly income. She's understanding the tax strategy better because she has access to us. As an investor in our investment opportunities, you get full access to us. So she's asking, hey, what about this? Hey, I just got this K1. Can you explain this to me? And that's what we're doing for her. And she's understanding more and more and more. And now she's starting to feel in control of her future because she now understands, wait a minute, I can take a loan out on that 401k and I can invest it over here and I can make 14% and then I can pay myself back because that's what you're doing when you take a loan out on your 401k is you're paying your own interest. So you can make 14% here, you can make 5% there, literally making money on money. That's how you get wealthy. That's how you take control of your future. You start sending out your money to make more money for you instead of you trying to make more of it. So your first investment doesn't have to be big. It doesn't have to be this big, ginormous thing. It could be small. Many investments have what's called a minimum investment. So figure out what that is. Now, if you only have a small amount, maybe you only have 5,000 or 10,000, you're going to have to look at different investments. For instance, on our fund side, 50,000 is the minimum. But if you're non-accredited, we had an opportunity that came out where 25,000 was the minimum. We have other opportunities where you can go in on the debt side and 10,000 is the minimum. So there's different opportunities that avail themselves, and you need to know a few things about yourself. So you need to get clarity. What will this give me regularly? Will it give me cash flow? Will it give me tax benefits? What is it going to give me? If you're trying to create a retirement, retirement isn't about the lump sum you have in a bank account, because I don't know if anybody's actually on here that's of this age, but there was a run on the banks, guys. And guess what? Everybody lost all that money. So having a big bucket of money at $2 million sitting in some bank account somewhere, not only is it not federally insured, but there's no real guarantee there. So having a steady stream of monthly income, that's what retirement is. You don't have to think about it. The check comes in the mail or it comes directly to your account. That's retirement. That's freedom. So understanding what it is you want and what is this particular investment going to give you. Understanding your partners, who's on the team, who's got your back. Do they have a vested interest? Where and how did they get their knowledge? Did they go to school for it? Has it been tried and tested? There's a lot of people that have gone to college and know zero because they've never put it to work. They have no idea. And there's a ton of people that have done a ton of work outside of college and are far more knowledgeable. So understanding how they've gained their education, where they've gained their education, are they putting it to work? Are they being open and honest? Anytime you are dealing with financial things, nobody wants to feel like somebody is hiding something. You want to know that that's an open book, that you can look at any point, that you're going to see reports that can be verified by auditors or CPAs or lawyers, things like that. You don't want things to be hidden. You don't want things to be like sleight of hand. And that's where understanding, is this person, how do they have credibility? Have they done this before? How many times have they done this before? Things like that. And how important is their education to you? Right? It needs to be important to you, but it also needs to be important to them, because I don't want investors who don't understand the investments they're going in. I could get in serious trouble with the federal governments if I do that.
Mhm.
So I have a vested interest to make sure you are very educated and understand what you're investing in. Understanding the trade offs. Financial literacy is power. Understanding how money is made, where money is made, how and when it best moves, understanding all of the power of compounding and getting there. That doesn't mean you need to go get this finance degree to do that. You can just educate yourself on just a few more things, and then you start putting that into practice, and now money started working for you, and maybe you're getting a little bit more time back, and now you start educating yourself on a few more things, and now money's working for you and you get a little bit more time back. You're starting to see the pattern. The more educated you are, the more time you get back, because now you're working smarter, not harder. There's a difference. When you are trading time for dollars at a regular W-2, there is a certain level of control that you are giving to somebody else. So understanding how you can regain your control, not just of your money, but also of your time, is powerful, absolutely powerful. And it can also help you avoid traps that will cost you later. We never forget the mistakes that have a price tag attached. We'll often forget mistakes and repeat them again and again and again if there's no price to it. If it doesn't cost us anything, we'll keep doing it. So those ones that cost us, and some of mine have some pretty hefty price tags. I'm not forgetting those anytime soon. So also understanding your tax strategies. When you understand your tax strategies and you educate yourself on that, it can allow you to not only make smarter choices, but sometimes if you only, for instance, have 10,000 to invest, but you might get a tax benefit here that can reduce it in another area, you actually could be doubling your return. So tax strategy is a big part of the game, and understanding that. It's like having a chessboard and knowing the different players on there and what their roles are. Tax strategies are those knights. Those are, and there's two of them on your board, and you want to understand how to use them. So recognizing that. Working with a team, just like you have pawns on there, right? You have an entire team. That's your first line of defense, right? That's what pawns are for. Now, some of them can be cast by the wayside, your third party vendors, things like that. But your closer, intimate ones, you don't want to, right? You want to protect them, your rooks, your bishops, right? You want to protect them because they're protecting your king and queen. So understanding that the team and picking the right people, understanding who they are, where they come from, what they're doing, as well as understanding you're never going to be able to do it alone. You don't know what you don't know. And that's the reality. It's very important that you understand you only know this much. And for you to get to that next level, you need to find somebody else to get you to that next level. Somebody else either wrote a book, somebody else did a podcast, somebody else is doing a webinar. There's somebody else that you have to find to get to that next level. You can't do it alone. And you can't wait till you feel ready. If you waited for that, you'd be dead. Because by the time you felt ready, it'd be too late. You wouldn't even be able to retire and you would have worked yourself into an early grave. So you cannot wait until you feel ready. You don't need to know it all to get started. You just need to know a little bit more than you did yesterday. Take action, do a little bit more. Learn a little bit more, take action, a little bit more. Each time you will get better. So that's why you don't, oh, I wish I would have invested years ago. Who cares? Start investing now. I wish I would have bought real estate years ago. Who cares? The right time to invest is now. The right time to get started is now, not yesterday. It's now. Because if you wait until tomorrow, tomorrow never comes. That's why it's always called tomorrow. Think about it. So you want to get educated. You want to start joining our conversations. You want to come. We have webinars every single month. Education, 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 free to you. You want to learn to ask better questions. Don't be afraid to ask. Ask the dumbest question you can possibly think of. Why? Because the dumbest question is the one you don't ask. So ask better questions and start small. It doesn't matter how small, just start. The key is to just start. Whether you go into a crowd fund and you're doing $5 or $10, just start, right? Don't expect perfection, expect to learn and grow. And as we learn, it's because we fail, then we get back up, fail, get back up, fail, get back up. And each time we're failing forward because we're a lot further ahead than we were when we started.
So let's talk about how EmpowHer Capital makes this easy for you. It is a cycle of learn, act, earn, and learn more. That is what we do with anything that we are doing with life, is there's always going to be some type of cycle. So the first thing you want to do is take the action, whether that is scheduling a call, it's connecting with someone, but you really want to be able to start to visualize the new reality. Maybe that reality is right now. Maybe it's for your future. Maybe it's talking about a legacy that you've never dreamed that you could have. As I mentioned earlier, so many of us are not taught to dream about really what retirement could be like. We don't have time, we don't have guidance, and we tend to lose how to visualize things as we get older because our creative mind disappears as we get conditioned through school and all of these things. So it's so important to find time and someone to help you visualize what your reality could truly be. Because I don't know about you, but I definitely do not want to work until I die. I don't want to work through retirement. I don't want that. I literally had someone yesterday at my event say, I'm retiring in a year and a half, but I'm finishing my teaching degree, and I think I want to work in HR and retire or during retirement. And I just was so confused because I was like, wait, if you're working, you're not retiring. You might be doing a career change. But what I noticed for her is that no one has really taught her to dream about what that reality could be for her when it comes to retirement. So that's what we did yesterday as we started talking and brainstorming what that could look like. And now she's already trying to figure out what can she actually do for her investor status, what opportunities that does she have so that she can actually start getting to that bigger open picture. And number 6 too is start investing and earning that passive income. We've talked a lot about how you can get the passive income because at the end of the day, we don't all want to be active investors. You don't want to be an operator. You don't want to be doing those things. We want you to be enjoying your life where that passive income is replacing your current active income so that you can travel, you can be with your kids, you can be with your family. But everything starts with step 1, taking the action, scheduling a call, visualizing that reality that you didn't know you could have. Determine what type of investor you are. Maybe you start here and we get you to the next level. And then viewing what opportunities you have to really get that passive income. And the quote that I always like to share is if you can dream it, have the courage to take action, and have the discipline to stay on the right path, you will make it. We always have mistakes. We always learn. We always grow. If we weren't making mistakes along the way, we wouldn't be doing anything and we'd be stuck. So take that action, believe in yourself, and hold some discipline because you can get there. With that, I'm going to let Bethany wrap us up. This has been wonderful.
Well, I'm so glad that you guys were able to make it here today. I know we have taken your time, and I hope and pray that it was worth your time. I hope you learned something. I hope you gained some knowledge, and I want to see you take action. So, the best action you can take right now is scanning the QR code if you've got your phone. If not, just go to empcfund.com and get started. Book a free consultation call. Let's start having some conversations. Figure out where you're at. We've got the tools and resources. We can help you figure out if you're accredited or not. We can help you figure out what some options are, and we can give you some resources. If we're not a good fit, we don't want you with us. If we're not a good fit, we want you to go somewhere else. But we have some of those resources, and we can encourage you and give you those resources. So, like I said, our plan isn't to get everybody be a part of what we're doing. Our plan is to educate you to make the best choice for you. So get a call today. Schedule that. It's perfectly free. It's simple. It's easy, and we'd love to get you having the conversation and taking the time. So we thank you for your time today. We'll look forward to next month's webinar. We do this every single month. You can check us out on YouTube. You can find us on LinkedIn. You can find us on Facebook. I believe we're on Instagram. I don't even know all the stuff Kylie does. That's how you'll find us. We're there. But the key is we don't spell it the way you think. So pay attention to that. So if you're looking us up, EmpowHer, EmpowHer, because that's our whole goal is to empower women. But when you put that ER in there, it just changes things. So we just removed the ER.
Yep.
And so we're Empower Her Women, and we want to make sure that you know how to make some better financial choices for your future now, not later, not tomorrow, now. So book a call today. We'll look forward to talking with you guys soon. See you next month.
Bye, everyone.